I already informed you that I am coming to Dubai and Abu Dhabi in the first week of October. Our meeting in Abu Dhabi is on the 5th of October. Those desires of meeting me in Abu Dhabi on 5th of October may contact the WhatsApp number and the email ID given below. In case you have not already done so, kindly do so at the earliest. There are limited seats.
Hi everyone, welcome back to Be Rich. It's me Vinod here, and I did actually have a video with Shashwat on release plan today, and I've pushed that video to tomorrow because of what we saw in the market today. I thought I'd just quickly catch up with you on that, and tomorrow we'll be back to our regular program where you get to see me and Shashwat talk about something interesting. Well, since I have your attention, I wanted to hope that some of you did manage to enter the market in different coffee levels. Did saw a lot of exuberance in our groups, that a lot of you were very excited to see some of the stocks we've been talking about, the companies we've been asking for consideration, them correcting deeply and nicely, and a lot of you wanted to dive in head first. And I did warn all of you on my different outlets to be careful and to be cautious and to stay within your Tiffin coffee range, as Anand says. Now, what is Tiffin coffee range? Which is still very confusing, believe it or not, for a lot of you. Tiffin coffee range means staying at a level where, the risk is nominal for you psychologically, meaning you don't mind losing that money. It's the kind of money which you don't typically worry about at a level where you say, okay, let's go out for some coffee, or, let's say go have a little more than a coffee. Let's have a snack and some coffee. We're talking about that kind of mindset when you're talking about the amount of money. We're not actually talking about the volume, because each person's appetite for risk is different. So when we say Tiffin coffee, you don't really mean like a number. A lot of you keep asking us, what is that number? I know it'd always be helpful if somebody else will take the reins of our life from our hands and run it for us, and so we don't have to feel worried about the uncertainty of life. But unfortunately, life doesn't work like that. Each of us have to put up with uncertainties in our own life. So each of us have to decide what is the actual amount which I'm comfortable with playing in the market. If you want to talk about in traditional sense, in my way, I would say investing in the market, because whatever I'm investing in the market now, I plan to hold it on for a very long time. A very long time is anywhere 5 years upwards, unless I see a reason not to be in that position anymore. Like I said in previous videos, why you should look at selling a certain holding is listed out. A lot of you have also been asking me, when I did put up the post on Instagram asking, so is it purely on the FIIs, saying yes, no, and why? A lot of you seem to be confused on why FIIs would want to leave India and go to China, because we have been doing so many videos about the downturn in China, how the Chinese economy is not doing so well, and post-COVID they really botched it, and we run so many videos on that. And so all of you are wondering, if that is true, why would the FIIs leave India and go to China? And we've been saying democracy is always preferred for an investor than an autocracy or any form of dictatorship, because you have rule of law. And we've been making those arguments, and all of you have been saying this is all true what you guys said. Why are they all running to China? Well, the thing about the recent play for the Chinese market, for the FIIs, first you got to realize FIIs are not long-term investors, correct? They're not FDIs. FDIs are foreign direct investments, and those people who invest in that channel usually tend to stay in the country which they invest in, and they try to invest in large volumes. So they have a voice in the company, and their approach to this is traditionally like a value investor. Well, FIIs, institutional investors, are guys who are inside trying to make a quick score because they have people they have to answer to, or they have targets to meet in terms of revenue generation. So to generate this revenue, they go around and see where they can quickly swap and buy things and sell things and try to make an arbitrage on the currency or on a stock and quickly make some money and pull it out. So then they can meet those requirements they have. So their outlook towards investing is very different from your outlook or my outlook. So when they enter a country like India or China or Singapore, they look for opportunities, and most of these opportunities in India currently are very expensive. Like I said, if you had bought Tata Motors, a year ago, you still stand in a very good percentage point. If you had bought Natco Pharma a year ago. You stand in a good percentage point. It's actually true for many stocks. Even let's say I take, for example, Reliance. Even example, if I've invested in Reliance, which we've always said is expensive, you're looking at an upward of 21% for 1 year. So most Indian stocks have rallied tremendously. So you may see correction today and be wondering what happened. But this amount of volume which has been building up, the value which has been building up, has been happening for quite some time. This bull run which we have been going through is for quite a long stretch. And the flip side is the Chinese economy post-COVID crashed and it's been in the lulls. So what has happened different in China is the Chinese government has finally woken up to this and they've said, no, we need to do something to stimulate our economy and to get people excited about domestically. This is, they're not worried about foreign institutional investors or foreign direct investments. They're only worried about their local population. Their local population, which is heavily invested in real estate, has been going through the doldrums, one collapse after another. So they've lost faith in a lot of their investment classes. And there's a huge contraction happening. So the government has stepped in and said, okay, let's put some stimulus. And they've got various stimulus plans out there. Those of you who are interested can definitely read about it, or maybe I'll do a video with Shashwat on that, explaining to you what is the Chinese stimulus plan, because that's something long and elaborate which I cannot cover in 3-4 minutes. But it is a nice mixed bag approach they've taken. And they've also got some new mechanisms with the RMB for foreign investors who are planning, institutional investors are planning to invest into their market, to offer their stock market some further support. And so what are they really hoping for is, it is called the China put, what the foreign institutional investors are doing. More than, on what is already there. This is what foreign institutional investors do. They see a future they think is going to happen and they make a play for that and they make a bet on that. So none of this has been implemented as yet in the Chinese economy. These are all being spoken and some of them have been said yes to. And they feel there is going to be a huge growth swing in the Chinese market with all this new stimulus coming in. And the funny thing is, this recovery you're seeing in the Chinese stock market is just not 1-2 specific stocks. It's the whole broad market in the Chinese market. This is what? Over 5,400 companies have all turned positive, except for 1 or 2. Believe it or not, I think it's actually 1 or 2 or 4 of them, which have not gone in this direction. The rest have all been pulled up and they're going up skyrocketing. And like I shared that graph in my Instagram handle, this upward trend in the last 7 weeks is almost of 21%. So for nothing, the Chinese market has gone up by 21%. And that's the play. And this is what the foreign institutional investors are doing. They're pulling out funds out of India and they're redirecting it there because they have, like I said, commitments to meet and goals to reach. And there's an opportunity there because there is a lot of value, if you see price to earnings value in Chinese market now, with all things considered, against the Indian market. So they're moving there. But thankfully in India, our domestic investors, all of us, have been buying into the market and we've been showing faith in the Indian market. So what we saw as a 2% correction or 2.5% correction would have been a lot more if it was maybe 10-15 years ago. We would have seen a more severe correction like the Japanese market. So the reason why you're not seeing such a severe correction is because as they're selling, there are enough people in India buying. And you'll see this price rebounding happening. And they'll hold the support up to a certain point and they'll let it drop some more. So the volatility which you're used to seeing, we will not see, but it is there. Behind the noise, there are lots of money being pulled out. And this data you can go check with the NSE website, and the BSE website will tell you FII's holdings and how much they sold and how much they bought and how much institutional investors have bought. That will give you more clarity on this. But the main thing which I want you to understand is, so this volatility which we saw today will play out for some time now. Okay, so be careful. Especially now, SEBI has also changed the rules for future and options and raised the entry level for these things. So please be very careful. Okay, it's not as easy as it was for you, some of you guys. I don't encourage it. But I find it funny because, like I was telling Albin, it's like raising cigarette prices and thinking you're going to curb people from smoking. I don't see that ever working, historically speaking. By raising prices, you cannot change behavior pattern of people, you're better off banning the product altogether. So if you want people to stop smoking, stop selling cigarettes. It's as simple as that. Anyway, all said and done, be careful out there. Tomorrow is Friday and we might see some more movement. Then we have Saturday and Sunday with the world hanging on threads in the Middle East. We don't even know what can happen on a Monday morning if something terrible happens over the weekend. So keep all that in mind and be pragmatic in your approach and stay in Tiffin Coffee ranges, please, please, please. And don't get overexcited when you're investing in the market. So thanks for watching the video today. Please do share this with your friends and folks, whomsoever might find this video interesting and informative. And nothing more than that. And I'll see you tomorrow. Or tomorrow will be Shashwat and me talking about something. I'll probably come again the day after that. Thank you and I'll see you soon. Bye.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.